Gold posting a daily high this Tuesday. We have Jim Wyckoff joining us. Jim, thanks so much for being with us.
Hello, Danielle. Always nice to be with you.
So, Jim, what are we seeing on the gold and silver front this Tuesday?
Well, Daniela, we are seeing Tuesday morning some fresh buying interest based upon improving technical postures for both gold and silver. In the gold market, we're seeing some safe haven demand surface as we see some of the periphery currencies in Asia come under strong selling pressure due to the rising interest rates in some of the major world economies.
Right. How are we seeing gold perform in rupee terms, Jim?
Well, I have not followed that particular cross, but we are seeing the rupee trade at a record low against the U.S. dollar. So I suspect with gold priced in U.S. dollars, that is maybe curbing some demand for those holders of the rupee currency.
So, Jim, we've recently had many guests on calling for $1,200 gold, and they're really basing this thesis on the fact that they expect interest rates to rise. What's your point of view?
Well, Daniela, I actually look at rising interest rates as a potentially bullish factor for not only gold, but for the raw commodity sector. When you see rising interest rates like we're seeing now, that's a sign of improved investor and trader psychology as far as world economies and the health of the economies and really the geopolitical environment. That all augurs for increased demand for raw commodities, including for gold, especially coming out of China and India. So when I look at rising interest rates, I look at improving world economies, and that's bullish for gold based upon the demand factor.
Okay, would you say the same for real estate when you see people bullish on real estate?
Well, rising interest rates, I think, could, certainly in the U.S. anyway, put a crimp on demand for real estate because of higher mortgage rates. But, when we see improving economies, when we see improved economic growth, that means more demand for all commodities.
All right, Jim, let's talk the Fed again. So there seems to be a consensus that come September, the Fed will cut back on its bond buying program. Do you think that this has already been priced in, or come September, which is right around the corner, we'll see more volatility?
Danielle, I think we will see more volatility. I mean, every Fed event that we've had the past several weeks or few months has been met with volatility. The marketplace senses that the Fed is going to do something soon, but I don't think there's a clear consensus on exactly what they're going to do. The FOMC minutes that are released on Wednesday and then the FOMC meeting in September will be very closely scrutinized, and I suspect there's going to be some volatility involved with those events.
Jim, before we get to your gold and silver outlook, let's talk PGMs a second. You have said that the bulls have a near-term chart advantage here. Can you explain?
Yes, the palladium and platinum markets have price uptrends in place, and I think that augurs again with the improving world economies making for better demand.
All right, Jim, on that note, let's get to your gold and silver market rating for this week.
Daniela, I'm giving silver a 6. That is tilted in the bullish camp. We have seen price uptrend develop in the silver market, new 2-month high just recently. So the bulls have some upside technical momentum in the silver market. Technical resistance for silver is located at $24. I'm talking about September silver futures. Technical support is located at the $22 level. Looking at the gold market technical posture has improved significantly from last time we spoke. I'm giving gold a Wyckoff market rating of 5, and that is in the neutral camp, but the bulls do have momentum on their side. We have established a 2-month-old price uptrend in the gold market, and the bulls have gained some good technical posture here just the past week or so in the gold market.
Jim, quite a jump on both gold and silver this week.
Yeah, we have seen quite a jump on the Wyckoff's market rating, and the recent upside price action in both of those markets has restarted the near-term uptrend. And by near-term, I mean the price action on the daily charts. And the fact that we pushed to new 2-month highs to reestablish those uptrends does give the bulls some fresh upside momentum in both gold and silver. For the gold market, we see some solid overhead resistance at the $1,400 level. solid support at 1,300, Daniela.
Excellent, Jim. On that note, final thoughts for investors this week.
Well, we're going to probably see some volatility after the FOMC minutes on Wednesday. Maybe not a whole lot, though. I suspect the more anxiety is going to come for the FOMC meeting that occurs in September. What you may also see the next week or so is very quiet trading as the Europeans and North Americans wind down their summer vacations. After the U.S. Labor Day holiday, in about a week and a half, I think you'll see increased trading activity. Also, you're moving into the months of September and October when the stock markets tend to see higher volatility. The bears tend to come out of hibernation during those 2 months. So we could see some more activity. Also, the U.S. Congress is coming back from recess, and they have issues they have to deal with. So could be some exciting times here in the next few weeks.
Absolutely, and we know we'll be closely watching the FOMC tomorrow. Jim, you mentioned Europe. Just a quick thought before I let you go. Everyone has called for the end of the recession in Europe. It's officially over. Is that a bearish case for gold?
Again, Daniela, you can look at that from two sides. You can look at the improving European economy as taking away some of the safe haven lure that the gold market has, but you can also look at it from a point of view of increased consumer demand for raw commodities, and that's going to lift the gold market if that's the case.
Excellent, Jim. On that note, I'll let you go. Thanks for your thoughts today.
Can't wait till next time, Daniela. Bye-bye.
And thank you for watching this edition of Technically Speaking with Jim Wyckoff. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.